Let's kick off with those January inflation figures, as we saw ticking down to 18.31%. But the sugar price was a key reason for this fall in inflation. We also had some other commodities coming down, but of course the big concerns is that basic commodities like grain and rice are still showing only muted drops there. What were your thoughts on the overall inflation picture that we saw in the month of January?
Well, thank you very much, Samantha. Very good analysis there of the overall picture, especially in terms of the macroeconomic environment. Looking at it in terms of the numbers, they're fairly positive, which is a good thing, especially in terms of the inflation position, which had been rising steadily over the recent past. But looking at it in terms of what the government is doing in terms of trying to make sure that it keeps the inflation in check, and also in terms of the consumption side of it, we are seeing a bit of a tight spot there in terms of how you're going to look going forward. But the concern as of now is what you said, their basic commodities, their prices are still fairly high, and the consumption need of the community is also a bit of a concern. So I guess right now what we need to do is to try and see how we can be able to still work at ensuring that the costs continue being down, the inflation levels being managed, as well, especially in terms of the forex market, as well as seeing what the government is going to be able to do in terms of ensuring that that remains in check.
Looking at the government's borrowing plans, of course, still with the deficit, if they are able to get these syndicated loans that they're looking for, and of course inflows from the IMF, what type of impact is that likely to have on the inflation picture for 2012?
Well, looking at the government also as a key player in terms of the economy, especially in terms of government spending, there's a bit of a concern on that front, because if the government goes borrowing, it might end up spending some of this money either on recurrent expenditure or infrastructure development, and that might still fuel a bit of inflation. I guess the concern right now is to be able to try and see whether the government can make sure that it cuts down spending and ensure that whatever it spends is what is absolutely necessary. But also look at it on the other side, this is an election year, and there are a lot of projects that need to be finalized, as well as also preparing for the same, and even the implementation of the new constitution, which will come with a lot of costs. So I guess it's a pretty tight spot for the government. But look at it in terms of the Kenyan consumer, definitely it's a bit of a concern in terms of ensuring that we still have an environment that can be able to support, especially the private sector growth.
We've seen, of course, the CBK continuing to come to the market to mop up liquidity. Of course, that indicating their tight monetary policy stance. Would that alone indicate that we're looking at a hold and a neutral stance with the MPC decision today?
Well, looking at it, the MPC, definitely the outlook most likely is that they might want to hold on some of the decisions that they've been able to hold on, especially the CBR. And the concern, I guess, would be just to make sure that the liquidity situation in the country is stabilized, especially in terms of the foreign exchange situation. And also looking at it in terms of the lending and interest rates right now, the liquidity that's there in the market is also something that they're trying to make sure that they put on hold in terms of spending. That might affect the private sector in some way, but looking at it in terms of the inflation levels that are still very high, it's still something that we might expect the MPC to continue holding on, especially maybe for the medium term.
What would a sustained slowdown mean in terms of inflation from your views? Because that's what most are highlighting we need to start seeing from the inflation rate.
Well, looking at it in terms of the inflation position, definitely inflation is good from an economic point of view, because it does create a bit of price rises and also stimulates a bit of economic growth. But look at it in terms of sustainability, especially looking at how the Kenyan market has behaved in the recent past. We've seen inflation month on month rising very steadily, almost to close to 20%, which definitely affects disposable income, and some of this cost push inflation, which is a bit of a concern, especially in terms of industries that are operating within our market.
So at what point in time do you think we're going to start seeing sustained inflation slowing down?
Well, looking at it in terms of the direction of the inflation levels, definitely within the next few months we should see that, especially as we near the end of the government year.
The shilling also appears to have stabilized. Do you feel that it's stable at these levels above 80, below 84 this morning? It's trading, of course, at a 2012 high. It has been on a strengthening path since we've had tighter monetary policy. Do you feel it's stable right now, though?
Looking at the shilling, yes, definitely the shilling is doing fairly well, and also the numbers that we are seeing in terms of tourism as well as exports is also really cushioning the shilling, and hopefully going forward we're going to see it stabilizing within the 80 to 90 range, and hopefully the government is also going to be able to be in check, especially in terms of the concerns that we saw towards the end of last year, which was hard even for us to pinpoint what was causing the situation. But going forward, I think especially in terms of the monetary policy, definitely that's something that we're going to see stabilizing in terms of the foreign exchange position.
Also, there's some concerns around the disagreement between government and parliamentarians right now around the capping of lending rates. Parliamentarians looking to cap lending rates at 400 basis points above the CBR rate. And the acting finance minister, Robertson Gattai, has of course just stepped in, is saying that they need to reach some form of compromise with parliamentarians because they could run out of money if they aren't able to pass a finance bill through Parliament. What are your thoughts on what's likely to transpire in the next 14 days?
That's a very delicate balance, just like you mentioned there, especially looking at it in terms of the economic situation. The capping the interest rates would be something that the government or even the parliamentarians may be trying to do so that they can be able to protect consumers, but also looking at it in terms of the private sector, especially in terms of trying to make sure that the market is open enough to be able to control some of these things based on market forces. That's something that we may not want to really cap, but looking at it in terms of other economies like the UK, we've seen some of these things being able to be put in force. We're hoping that as much as they might cap, they'll be able to give them room enough to be able to have market forces still in play. And hopefully that should be able to be something that we are going to see going forward in terms of sustaining the economic development.
Let's just quickly focus back on the equity market and look at some of the results that we've had coming through. Focusing specifically on the car sector, CMC Holdings moving into a loss for the full year, whilst we had Car in General, a stark contrast there, posting a pre-tax profit of 428 million shillings. What were your views on those two contrasting numbers there?
Well, looking at it in terms of CMC, I guess the concern for them has been the issue of management, which has been a bit very much in the forefront, especially in terms of how they have been running, especially in terms of their costs. Their revenues, we have seen a slight drop, which is a bit of a concern though. But looking at it in terms of comparing the two, Car in General has been able to diversify into real estate and also try to take advantage of some of the medium-sized sectors of the economy, like the smaller vehicles that they've been able to come up with, even the generators, which is something that they're being able to generate a lot of revenues from. And looking at even how they are talking about that, they seem to be making a bit of revenues from that. So CMC, I guess the concern right now might be for them to be able to straighten their books and put their house in order, hopefully, so that they can be able to still sustain their market share, which is fairly good.